Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
I just want to give everybody another 30 seconds or so. Jack's view is that obviously that there is some potential for the dollar to be supported, to have a risk bid. If you guys haven't signed up for the currents, every morning there's something in there that's interesting. The other day, I think his son wrote about the Canadian dollar and crude and basically the difference of where the Canadian is relative to where crude is now, these correlations, and that's the one thing that they always stay open to saying that, maybe those correlations will never go back to where they were, but they want all investors to understand that these relationships are out there. Jack, would you just mind talking about a couple of things that you look at? And I'm always amazed at the insights that you give all your readers, but I just would appreciate just a couple comments.
Oh, thank you, Steve. Yeah, we do look at the correlations pretty closely, and as I said when I started this, currencies are driven by global money supply and demand, really moving across the globe, and really the way to see that is a global macro basis. So we look at a lot of different asset classes to get a feel for really what area is hot and what's not, to try and judge some of the money flow, whether it's into the dollar or out of the dollar or into a particular region. So we'll talk about that, and we may, spend time, talking about gold, and people say, well, why are you talking about gold? It's supposed to be gold. The correlation between gold and the dollar long term has been very, very, very tight, very, very negatively correlated. So we talk about a lot of things like that and try and bring it back to the idea of money flowing in or out of the dollar or other currencies in support of. And we try and do it with a view that, hey, we don't know if we're right. We'll always stay open because of the fact, if you've traded for a number of years, and Steve can attest to this, when you fall in love with your own story is when you get slammed the most. So we try and give give different views, and we try and give another view that other than the consensus is out there. We always try and tweak the consensus a bit, not to suggest the consensus is wrong, but to try and make people think about some other scenarios or other ideas out there to help them maybe even control the risk.
Two more. One is a very straightforward. George wants to know, is it true that Germany is the world's largest exporter and not China?
That is true. Estimates based on the 2008, Germany is still the lead. Germany has been the number one exporter for many, many years. It's a great trivia question. Most people don't know that Germany is. But in 2009, some people think China is going to take over the crown, and it may be, but the numbers aren't in yet. But the estimates from the CIA fact book suggest that Germany is still the winner in 2008. One of the things to keep in mind there is if you think of China's currency being so incredibly suppressed, if you were used a purchasing power level for the Chinese currency that's higher than some of the estimates, then China would definitely take the lead. So a lot of this goes to judging purchasing power of the Chinese currency, which it's hard to do given that it's fixed and pegged to the dollar. But at the moment, Germany, or at least, is considered still the leader.
That's a great lead into the last question. Ken has a question. He says, some say that China could start demanding the U.S. to borrow in yuan to protect itself from further currency risk and thus bearish for the U.S. dollar. What do you think, Jack?
There aren't enough yuan, really, out there from a supply standpoint because it is a fixed currency. For China really to make its currency become a competitor in the world markets, it has to free up its financial system and really get rid of its capital controls. One of the reasons China doesn't want to get its capital controls, because if they give up their capital controls, it means they give away some of their social control that they have over their citizens. So it's not a viable alternative yet until China makes that leap and lets their currency, float freely or completely removes the capital control so they can have a viable market-based system of valuing things. Until that's done, these scenarios will not happen.
Okay. Last, I promise is the last one, Jack.
Sure.
Jen says, glad you brought up gold, Jack. So with a higher U.S. dollar, would you be looking for lower gold?
In a different environment, a regular cyclical environment, we would just say absolutely yes. But in this environment, it could get very, very interesting because again, this is a structural change. If the potential plays out that the European Monetary Union gets into trouble during the dollar risk bid, we could probably see a decent portfolio flow move, one, into the dollar and two, into gold, and we could see them moving in the same direction. And when, in fact, we saw that this year. We saw the U.S. dollar and gold moving in the same direction for a couple months that we hadn't seen before for a very long time. So just be very, very open to that. Long term, a bull market in the dollar usually leads to a bear market in gold. And if I can just put a little more nuance on that, Steve, the reality is, if you think of gold, it is your global purchasing power because it's priced in dollars. If the dollar's falling and gold has to maintain its purchasing power across all goods around the world, it has to rise in value because it's priced in dollars. But if the dollar goes up in value, the world reserve currency, then gold can then fall in dollar price and still maintain its global purchasing power. That's why you tend to see that mirror image relationship. It's a real economic relationship between gold and the dollar. It's not just a coincidence.
That brings you back to the relative game, like you said. If the dollar starts to do better against a lot of the currencies, then you can see gold doing well and the dollar doing even better, correct?
That's right. You could in that risk scenario, if the dollar does something, and then there's all those risks between gold and some of the other major currencies that we don't have time to get into. But it's also there. You also see some very interesting indicators that play out if you follow gold priced in Swiss franc or priced in euro, for example. Often that can be some nice indicators to give you some setups.
Jack, I want to thank you on behalf of the IC. Tremendous job. I've had a dozen people at least send me a private message that they've learned a lot today.
Great.
I've learned a lot. Every time you come on, I learn a lot, so I really appreciate it.
Thank you.
I would highly recommend that everyone sign up for the Currency Currents. That's free, so you get it every morning. Please do that, Black Swan Trading. You'll be able to see this right at the end of the webinar, so you can go and sign up for that. Then you can decide for yourself if the strategies make sense. You're going to want to come back on August 18th to hear Jack talk about the reserve currency status. Next week we have Stanley Dash talking about how you can trade FX options right through his bridge account, or his firm there, I should say, is TradeStation. So he is a broker there, and he works for TradeStation. And then Mike Tussaw will be with us on August 25th. Jack, any closing comments?
No, I guess I'd really just emphasize exactly what you said in the beginning. Just stay open out there to these scenarios, and I think it'll help you control risk and in position maybe a little bit in front of the crowd. And that's what this is about. Great
point. Risk and reward. If you're always thinking like everybody else, you're going to have to put yourself in maybe a bad risk-reward position. Not that you always want to be a contrarian, but like Jack said, think for yourself, listen to others, and then come up with a strategy that makes sense for you. Jack, thanks so much. Really appreciate it.
Always my pleasure, Steve. Thank you.
On the behalf of the ISC, this is Steve Meisinger saying have a great trading day tomorrow. Really appreciate everybody being here today. And please join us again on August 11th, Stanley Dash from TradeStation talking about trading FX options. Then we have Jack coming back, as I said, on August 11th. And August 25th, we have Mike Tussaw. Have a great trading day tomorrow, and have a great night. Thank you. This is Steve Meisinger saying have a great evening. Bye now.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.